Hi, everyone. Welcome to the TimingResearch.com crowd forecast news for January 23rd, 2023. We are recording this at 1 p.m. Eastern, and this is episode number 373. My name is David Kosmeter. I'm the creator of TimingResearch.com, and today I arranged for Michael Filighera and Simon Klein to join us again. And the option professor is back to moderate, so I'm going to go ahead and turn it over to him. Okay, great. And good to have you with us. I guess there's only two words to describe today so far, and that is risk on. So we're getting quite a nice up move on a lot of different things here today. So there's a lot to talk about. Before we get started, let's introduce ourselves. Michael, why don't you start out, introduce yourself and also your company.
Sure. My name is Michael Filighera, and my company is, it's actually twofold, is tradershelpingtraders.com and also logicalsignals.com. My main website at the moment, because it's where I'm putting all of my work, is tradershelpingtraders.com. I have been trading for over 40 years. I've been an options market maker. After leaving the floor, I decided that I would become a home-based trader, and in about 2013 switched over and just became a day trader, and that is what I continue to do now.
Sounds great. Simon, a little background on yourself and what's going on at your company?
Oh, hi. So I've been trading for a number of years. I actually started my professional life in Credit Suisse in 1996. That's quite a while ago. And TradeSmart's a trading education business. And what I noticed that there was, many companies out there training traders, and they were successful, but the traders that they were training weren't. So I thought to myself, what's the issue here? There must be, maybe it's not a one size fits all. So what we do at TradeSmart is we focus on teaching you how to read the market professionally as a framework for reading a market, any market. And then we also focus on what you need to learn to be able to run a successful trading business, the framework process that you need to go through so that you can develop your own trading plan and strategies. Most importantly, that fit your personality and lifestyle. So you don't need to follow someone else. You can become an independent trader. So that's what we kind of focus on.
Yeah. And I think it's very important, like you say, to get a strategy or a methodology that fits into your lifestyle and your temperament, because that's really the key. You can't really do other people's things if it's not comfortable for you, right?
Yeah, exactly.
No, that's an excellent way to go. All right. Well, it is Monday, guys, and we always start out with an easy question, which is the market opened at such and such a level. I think in the S&P, let's call it somewhere in the 3950 to 3975 area, something like that. And where do we think we end on Friday? So obviously between now and Friday, you've got PCE coming out. You got a GDP, gross domestic GDP coming out. And so there's other stuff coming out and earnings, of course. So where are we going to end up? Let's start out with Michael. Michael, where are we going to end up? Higher than the 3,900 and change or lower?
Lower.
Okay. And what's your confidence level?
60.
About 60%. And
Yeah.
Simon, how are you feeling about this?
Oh, wow. That's a good question. For me, it looks, I think, higher. I'm going to say,
of course, you got a good advantage, because I'm getting you in at 3,978. So, you already got a 50-point buffer here,
based on the market structure. We'll go into it afterwards, why and what I see. But today was a definite long. And,
no doubt about it. And there's no evidence of any immediate turnaround in your view right now. So
it may turn around, but I'll go into it afterwards. But
I'm with you.
Yeah, we'll go when you ask the question why. So.
Exactly. All right. So Michael, what's behind the curtain here? Where do you get this idea that we're going to turn around after this kind of an up move on the opening?
Because of what the up move is really being based on. It's actually it's a repeat of Friday, where we saw very light volume push all of the usual suspects, at least within the NASDAQ, and of course they get the equal weighting in the S&P. And so the push there ended up being more of like a gamma squeeze, a short squeeze, and all kinds of different squeezes. And that is now rolling over and occurring again today, that I noticed it and continue to notice that the volumes are extremely low for this size of a move. Normally at this time of the day, the S&P future is well over 1 million contracts, like 1.5 million. And if it was on a day that the index itself is up 60, $58, $60, you would expect that volume to be almost double.
Yeah.
And it's not. And if I look at the NASDAQ, it's even worse.
Right.
I mean, even if I'm looking at the micro in the S&P and in the NASDAQ, usually by this time of day, they're both well over 1 million contracts, and they're both well under 1 million contracts. So I think when it goes up on low volume, because there's a very strong absence of sellers, because we're all waiting for, Fed, we're waiting for the earnings, we're waiting for a lot of things. And so I think that it gives a false illusion of strength. It gets a false illusion of a market. And then also I'm basing it on that my Elliott account.
Yeah. Which
My
we're going to get to in a minute.
Okay.
As far as other reasons in a second. But to summate what you're saying essentially is that when the market dropped down to 38.90 last week and the whole world started to short, if you were short, Friday, you definitely got out. And on Monday, your boss told you to get the hell out. In other words, if you've been short this market and you're on a trading desk, you probably got out on Friday during that big rally. But this morning, your bosses tapped you on the shoulder and say, cover those things, right?
Yes.
And so basically you're thinking technically about the idea that the volume's light because most of this is short covering. And when the short covering dries out, and then we start looking at a GDP or a PCE number or the Fed, that's going to be more hot coffee at a drunk's party. And you think it's going to roll over because of that.
One more thing that I want to add, because it's not necessarily just all short covering. I think that the other thing that was really going on Friday is that we have a lot of algorithmic firms and they just scan the markets because they're premium traders.
Yeah.
I mean, the derivative market and the options market, as you know, AKA your acronym there, option professor,
right?
Have increased threefold, fourfold in terms of volume and participation. And when we're getting into the situation where we've been moving into, the premium is so high. And so what really starts to get set up is like on the weekly level. And so we got adding in is that we have expirations basically every day in the SPX and the ES. And so that just adds a whole lot of volatility in strange directions, even though if we're balancing it out against the volatility index, the VIX.
Yes.
So when you put that all together, we get the moves that we're getting, but it's not necessarily signaling bullish, because if these algorithms are selling calls, the hedge is buying the underlying. Yeah. So, and
well, like I say, at the end of the day, you can't fight the tape, and the tape has got green all over it the last 48 hours. So there's no doubt.
Absolutely,
about that.
Absolutely correct.
Let's turn over to Simon. And Simon, what's your take on your reasoning? Yeah, a little bit more about what's in your mix.
So I want to share the screen. It's best to
please,
illustrate by seeing what I'm looking at.
And after you do that, Michael can do a little Elliott count and show us on his screen too.
You should be able to share now.
Get that prepared.
Okay, let's do that. Let's get the right screen up here. Screen 4. Here we go. Chat.
Yeah, it's always helpful to see what you're looking at, right? Yeah.
Let's see if I've got the right. If that's working, you guys can see the screen.
Yeah, you got a number of them up there, right?
Right. So I'm looking at the S&P through the E-minis here. So I want to show you something interesting here, and I'm going to go down the time frames. So I'm going to show you exactly how I read the market and what's going on here. So we had the top of the of the E-minis over here with this move down, and this changed trend, and we start moving down. Now we're still in a downtrend on the monthly chart, but we came into a very critical area here. and we bounced off this area. Now I want to show you something else. If you look at the distance between the pivots here, if you look at the pivot highs here, here, and here, and the pivot lows, they're getting smaller and smaller. You got distance between this pivot and this pivot's larger, but this one to this one's small. That's one indication that the trend may be coming to an end. So bear that in mind. What I told my trading room is that this could be potentially where we go up again, or if the trend's going to stay intact, this move up will be sold and we'll continue on the downside and break this level and come. And that's another possibility. But if we're going to hold this, then we'll know, this could be a level where we start moving up from. This is what I'm seeing by looking at the distance between the pivots here on the monthly chart. Now, let's go down onto a weekly chart. Weekly chart, which is interesting here. If we look at the pivots here, now, you can see that we took out this level slightly. We went above. We just peaky booed above that level, meaning there's no more supply at this level. And if I watch what's going on here, the last pivots that we see here, we see a higher low, higher high, higher low. So I'm expecting higher high, which means a move above this level for this to play out, for this to continue out. Okay. So, and you can see we're moving. We had this move here. This tried to go down. If we were going to go down, it should have gone down here and failed, which means this week we're definitely, almost definitely, you can't say definitely, but the odds are very, very high that we're going up this week, at least up until this area. Yeah? Now, let's go down to a daily chart and we can put it all together. Yeah, and this is where it makes it super simple. So in the daily chart, we're actually in an uptrend. Okay, so if we look at the pivots, we can even start from here. We have a higher high, higher low, higher high, higher low. We're in an uptrend. So we expect this move off this level to go above here, which is already done today. So that's why the odds are so high today. This is going to be a long. What are the odds that this is going to turn and go down? Almost none. Very, very low. We're at least going to move up into this area. You can see we're almost there now. Yeah. And it's pretty much the same. So I just follow what the market's telling me. It's telling me it's a long and it's going up at least until here. What's it going to do over when it gets to this area? I don't know. But then I go up the time frame to the weekly chart and I say, well, based on the weekly chart, we should be going above this area. But if we don't, then I know that the market's not going to do that. So I'll watch this. If this fails and we turn down, for example, and the trend changes here, say we pull back from this area and we move up and we fail to go above this area, then we'll start to see this turning here. And then maybe this is going to continue the monthly downtrend. But at the moment, we've got a daily uptrend, the way we trend. The weekly, once we go above here, that will also kind of start to look like we're going in an upward fashion. And we're still in a monthly downtrend. So again, monthly down. If we look at, interesting, if we put this against the NASDAQ, the NQs, yeah. The NQs was a weaker market because we went below this area. We didn't hold this area. But you can see, if we look carefully here, we're already kind of planning. I mean, this is looking like we're going to move above this area. Yeah. And you can see today, I mean, it's super simple. Once you understand what's going on here, you see the move up, the pullback, Friday. Where do you think we're going? At least up until here, and which is pretty much where we've gone. And we were heading, I mean, the number in my head was 12,000. I mean, we're 50 points off. Yeah. So, and we could still get there. We may even get there by the end of the day. I want to point out something else, how you know where the market's going at the beginning of the day. You see, we go sideways. You can see this move and this move. It's like a measured move. This move from here to here is very similar to there to here. When you have a market that's basing at the highs, it's bullish. Most often than not, bullish. It's not going down, it's going up. Because this is what we call a consolidation in time. Consolidation in price is a pullback. Yeah, this is stronger because the demand is not letting price drop. They're buying at this level and not letting it drop, means there's still enough demand. And just look at this move and this move. Almost the same, and we know exactly where it's going once you understand supply and demand levels right up here.
Do you have some of your students that tend to trade the first couple of hours? Because, Anka Metcalf specializes in that type of activity, and she's pretty happy about it.
So here's where it gets super interesting. One of my traders who I trained about 5 years ago now, got so good at this. And basically the beginning of last year, we launched a program that she was teaching people how to trade. She's so accurate at trading NQ at the cash open. So now we have a whole group of people trading basically the first half an hour of the market. successfully. I mean, there's those that are successful and those that are just coming into the program and they're learning. But the ones that started the beginning of last year, the majority of them are successful now, which is amazing.
Yeah. And then they can do their business, then go on with the rest of their day.
Half an hour a day. Yeah, that's it.
That's not bad. Hey, Michael, what are you showing as far as the Elliott wave stuff that you were looking at?
So I'll stop the sharing.
Yeah, hold on a second.
Because I do have one moving average that I work with on SPY that comes in at around 403. And I notice it's up near that area there. And I'm just wondering, could that, because we have sometimes it's turnaround Tuesday, right? So we've had a big move here today, and we're running into a significant number for me, which is around 403 on the SPY.
Right. Let me just take this off for a moment.
Which I think correlates to around 40-40 or 40-45 on the S&P E-mini. So it's in the same neighborhood here.
It is in the same neighborhood.
So is there any evidence that you can see that it could be a turnaround Tuesday after this?
Actually, it could be a turnaround Tuesday. I do think so. I'm going to start on the weekly because we're starting on our biggest chart. I feel that what we've reached up here was the all-time high, but I think it's a much longer term corrective process that we're now in. Yeah. And there's many different degrees at which have to be corrected. So I think that we're in the beginning phases of a C wave down, which will ultimately lead us to a very solid low and then turn this market into a massive rally. But I'm not really expecting that till at least end of the first quarter, into the second quarter, and then possibly through the end of the year. But more currently, I don't disagree with what Simon is talking about. But my Elliott count shows me that we finished a primary B wave in August. We've come down in 5, which puts in the first intermediate wave down within a primary C, which will consist of 5 waves of intermediate degree, of which we've got 1 and 2. So if we're inside that intermediate 3, then what does that suggest? It suggests that we're going to come down in 5 waves of minor degree. So here was minor 1, and now we're working through minor 2. And so this, we're finishing it up, in my estimation. Let me go back down now. I'll even go to the 4-hour chart so we can see it more clearly. Wave C, within it will always be 5 waves, and then I got 1, 2, and I got 3, and here's the 4. Strange pattern. I do not disagree with that, but it seems to be what is happening here. And that would project, and actually in the S&P, it projects up towards 4068-ish, I believe. And what I can do is I can throw up some fibs there very quickly, which were there before, but it really was blocking the chart. Come on, that's the one I want. Give me that. So yeah, right now we're buffing up against 45-ish, and their next up is 4078, and then 4097. Now, what would change my view dramatically is if it did come up and break 4180, which is that previous high. Oh yeah. Then seriously, what would happen is this would come over, and that would allow for a much larger rally now. Exactly. And then that rally would definitively call for 43, 44, even as high as 45. Yeah. Yeah, because I was looking at a Fibonacci 38% deal takes us to around 4,000. If you go 4,800 ballpark and 3,500 ballpark as the range, 38% snapback. You mean? I'm just saying, yeah, like when you go from 4,800 and change down to about 3,500, 38% snapback is around $4,000, and a 61% takes you up to a little bit over 4,300. So right now, I think you're in a very critical area where if this thing does not bend, looking for another 200, 300, 400 points on the S&P, is possible. The upside, you mean? Yeah. In other words, if it doesn't stall here, if it doesn't stall here, there's another floor upstairs. And the way Simon was seeing his activity, that's the way the tape is painting right now. Yeah, you don't disagree with that. Yeah. So it'll be very interesting. It's very interesting how things will pan out from right here. Right. But And I am a technical trader, so please don't misunderstand me. But one thing that I've learned as a technical trader, reality and catches the technicals, and
Yeah.
reality at times will take over. And so that part I've noticed. So I get these strange moves, and I'm like, wow, okay, technically I got it covered. But then reality steps in and goes, well, okay, now what's going on? So I think that's like the markets are extremely fluid, and the markets are trying to react to everything under the sun. And so, and searching for their points of control, so to speak, where we can trade, where things will happen.
Yeah.
And so I don't think we're there. And I think there's too much laying out there that could upset this apple cart real quick.
Yeah. Right now, you've got a perfect storm of the January effect where money flow comes in January. You've got the second largest economy in the world, China, that's easing and stimulating. And you got the first largest in the US that the anticipation is that they're very close to stalling or rolling over. So that's a lot of, and then of course the dollar peaked at 115. So you got those events coming together, and that means money, and the positioning going into this year, everyone's talking about a bad first half and a second half is good. So you got positioning negative, you got all this positive stimulus, you've got the dollar dropping. So EM's going nuts and Europe's going nuts and China's going nuts. And if you are short this market, which obviously a ton of people were coming into this, you are totally covering and you are totally reversing yourself. And the algos obviously always press the weak side. And obviously if there's no sellers, that's the weak side. So, you got a very good January here of a perfect storm. And the question is, does the storm end around 4,000 or does it go up towards 43, 4,400? And I think we're going to know that pretty darn soon.
I agree with you. I think we will know very soon.
Yeah.
Yeah.
So
I mean, don't forget tomorrow, just to add, Jim, because I know this is important to everybody.
Yeah.
Don't forget tomorrow we have tomorrow's Tesla and Microsoft.
Yeah.
Well, where are they really trying to like cover? Tesla and Microsoft.
Oh, there's no doubt. There's no doubt, because again, like I say, these companies, they have not been announcing the worst earnings of all time. And if the earnings don't break, it's very difficult for stock prices to break. So a lot of people are anticipating that, inflation plus higher interest rates equals slowdown, but that equals slowdown time frame has been a really rough call. And that's obviously it comes down to also everyone's got a job and everyone's making money and people like to spend money. So,
I agree.
But Simon, is there any other are you doing mostly indexes, Simon, or where do you focus when you're actually doing the where do your students tend to focus on? Is it stock indexes or?
They trade all different markets. I mean, I primarily focus on the Forex market. I also look at futures, like E-minis, NASDAQ.
Well, could you share your screen and give some illustrations?
Sure.
Yeah, because that currency market certainly has been snapping back out of the catacombs of October. Huh?
Okay, you can see everything now. You can see the E-minis now. Yep. So let's go. The dollar is also very interesting at the moment.
Yeah.
Now look at the dollar index, and again, I mean, once you understand what you're reading here, I'm pretty much a pure price action trader. Almost no indicator. You see one indicator, I almost don't use it. I use it for one type of trading, which I don't do too much of, but it can help sometimes. But I just left it on. Just have one indicator on the chart, but I don't need it. So I can see here, if we look again on the monthly chart, you can see this massive reversal bar down and break of trend here. And then we just bounced up and hit this level and came back down, and we haven't yet broken this level. This is what we're holding. If we break this level, we've got a way to go. So this is the dollar. The dollar's in a very critical level. The markets are in critical levels. And this is, you see, it's kind of holding on for dear life here. And we're getting this sideways choppy market. Now, I want to show you something interesting here. Like this was the beginning, like last week. You can see we moved up and failed and came down to this area, trying to move up. And you see today, we're holding on for dear life, this level. To go up, we must take out this high. So, and again, that would affect all the other all the other markets as well.
Yeah.
Also, a weak dollar is good for the stock markets as well. You know.
But also that would mean if the dollar is going to hold this 101 and not go down to 97 or 95, that would mean that the euro could have trouble at 110 and the British pound could have some trouble at about 124 or something like this.
Yeah, I mean, you can see what's happening here. I actually shorted this today and also shorted the pound today, but I didn't outstay my welcome because these are bullish markets at the moment. There's a bullish market, it's a bullish market, and you can see on the 4-hour chart what happened. We pushed up and I shorted up into this area and down to here, basically, on the euro. I mean, that was a trade today. That was the best trade today. That was it. The move down during the London session to here. Now, what's it doing during the US session? Not much. Yeah, it's you're getting this choppy, but this was the trade I took today. This move down. You can see again, if you know how to read the trend, this is supply, this is a lower high direction, what I call price direction down here. So it's going down. Where's it going down to? Well, I kept all these zones in. These are the zones of the base. So I know how to trade the base, because you understand the way bases work. You get fake out moves here and here. So I know this market's breaking to the upside and it's going to my next level. And when it comes down, it's going to come back on top of the base here. And you see exactly where it stopped today. Look at that, to exactly there. On my zone. These are supply demand zones. They're not indicators. I put them on by hand and pretty accurate. I mean, I've been doing this for years now, and it is just, once you know where the market's going and the direction it's going in and where the next stop is, it's easier to understand, you know, and then it's just about having a strategy to get in and manage risk, and then there you go, and manage the trade. Another one we looked at, the pound. There's another one I shorted today. I actually shorted it on the 15-minute chart. I'll show you exactly where. I shorted it here, right there, with the stop above here, and this is a move down on the pound. And you can see also why. I mean, the pound's pretty bullish now. We put in a bottom over here, just pretty much like I'm moving up, and we've just also, this is another, if you look carefully here, you see it just peaky booed above the highs here, which is a lot of times a sell, but later on it may be a continuation to the upside, which is why the market sold off. But you're not out. You see there's two levels down here as well on this time frame, here and here, and you see it's going to stop on one of those and go back up again, because you can see also, if we look here, look at where it stopped. This is where I have my level drawing. We're back down at this level again and moving back up. You see that? It's a bullish market. So I know ahead of time where the levels, I know where to get in and out, and you can be what's going on. Now, the other markets I look at, oil is also pretty interesting at the moment.
Before we leave currency, do you want to throw the yen up there? Because that one obviously has gotten a lot of volatility because of their yield curve, situation.
Yen futures. Yeah. So, okay. So we also called every single move of this market pretty much. I mean, this move down, what was going to all-time lows. How do you, so we basically measured a move from here to here and then from here to here, and we estimated it was around 0.00 whatever 67. So it went down to 662. So if you look at where 67 is, it pretty much the bottom. And once it hits there, we were looking for a big move off there, and this is the first problem. This is the problem area. Plus, we just broke trend here as well, but we got to break above here to go higher. So what could happen is we could get a pullback and the continuation to the upside. And if we do get a pullback here, it's a viable one. And you can see also the trend on the weekly chart. This is up. It's pulling back, going higher, pulling back, going higher, pulling back. We've got to get, you can see this level here as well. Very critical level. If we get above here, we're going to see probably higher yen.
I mean, they've got 4% inflation, which is like enormous to them. And then the other thing is they have a new guy coming in March or April. So it'll be interesting to see what they do. But, you're thinking along the lines of they are going to have to normalize their stuff, and that's going to be supportive to their currency maybe, huh?
Well, I'm really just looking at the charts. I'm not thinking anything on the fundamentals. It's a beautiful thing that happened. I did this many years ago, probably about 15 years ago. Yeah. It was about 15, maybe more. I was watching fundamentals. I was trying to trade fundamentals and technicals and trying to figure out which way the market's going to go based on the fundamentals, and then using technicals to get in and whatever. And then you get yourself into the headspace sometimes, or the reasoning of there's good news, the market should be coming up, but yet it's going down. I'm going to buy more at this next level down, and the market's going down. I should be on the sell side. You see what I mean?
Yeah.
The news is good. So what? So
Yeah.
I decided, okay, forget the news, forget what I understand about the news, because I'm not a fundamental. I mean, I'm not an expert on the fundamental side of anything, and maybe not be privy to all the information out there. But one thing I am privy to is I can read a chart.
Yeah.
And to know why it's doing, I don't need to know why. I need to know what it's doing and what it's doing right now. And if I'm going to get in a trade, and if there's a reward to risk, and what the probabilities are. Once I've got all that, I know my levels, I know where I'm getting in, I know where I'm getting out, I know how to manage risk, and then you just repeat. And then you do that again and again and again. Why it's doing that? Well, if you look at the news is really the olds. They report afterwards. It's funny when you look at the financial news, they tell you the market did this today because of whatever was in the news.
Yeah.
After it already happened. Well, marvelous. You're so clever, you know.
Even the dollar dropping from 115, obviously in hindsight, it's because yields dropped from 435 down to 340. So obviously that's the reason people started dumping the dollar, because the yield advantage went out the window. But that happened after you already got the signal with your stuff.
Yeah. So it's funny. This is one of the things that I was taught by way back when from one of my trading mentors. He said, does the news cause the market to move, or does the market moving cause the news? I think it's the second.
Yeah.
So it's trying to figure out the news and what's going to happen in the market based on the news. For me, that wasn't really giving me an edge. So I decided at that point, this was many years ago, as I said, that let's just focus on what the chart's telling me. The chart's telling me where money's flowing, if the buyers are in control, where they're going. And then you learn all the different kind of fake out moves, all the nuances of the market as well. And every market has its nuances. There could be the algorithms, could be what, it doesn't even matter. But once you see those nuances, they repeat themselves again and again and again. And you're like, for example, bases that break out. I know pretty accurately which bases are going to break out and fail, and which ones, are not ahead of time. So, and what the probabilities are. So, ahead of time, if you see this sort of price action, that's a fake out move. It's going to go in the opposite direction. They're just manipulating the market to pull everyone in on the wrong side, or wipe everyone's, take their stops out and then take it in the opposite direction. A bit like playing peekaboo when you were a kid,
Yeah. You were talking about energy, and I think we've got to hit that real quick, and then we'll swing over to Michael to see his views on a few things. But you were mentioning energy, and, we're back up towards that 82, 83 area. My stuff had some resistance around 83 and then 93 on the crude, but what do you see?
Oil, yeah.
Yeah, crude oil, right?
Okay. So again, this is just pure price action here.
Right.
Very interesting market. I think this is going to move above this area. I think we're going to get a move up to the 90 area. That's what it looks like to me at the moment.
Yeah.
This is a demand area on the monthly chart. It's not an upward moving market. And we call this, you see the failure to go above this area. I don't know why it's so slow, but, and you can see how if we were going to go, look at the daily chart, if we were going to go down, we should have gone down here, but why is the market pushing up again?
Yeah.
So I think it's ready to, it's kind of sideways here, but it's failing number one here. If you look on the weekly chart, to go down to the bottom, and the pullback here stopped in the top part of this move. So it's probably going to break out. Can't guarantee, but one thing I can say is the odds are now more likely that it's going to break above this area and go up probably to 90 than it is to go down, unless it turns around here and breaks below here, then I know I'm going back down again. So
if you were seeing 79 prints, you would say that it's losing some good altitude.
Well, and if it starts to go below here, below
78,
78.45, whatever.
Yeah.
And it stays below there, and it tries to go back and fails, then it's probably going to go down. Markets move.
Yeah.
If you think about it, I always think about, like you're a salesperson, a salesman, a saleswoman, or whatever, and you've got your wares to sell. So where are you going to go? You're going to go where there's business to be done. That's where there's willing buyers and willing sellers. Yeah. The market's going to move to where those big orders are. That's supply and demand.
Yeah.
It's not very interesting to stay. We need business to be done. So all we're doing is looking at transactions that have happened in the market, basically.
Yeah.
But
and generally speaking, people might be hesitant to sell oil at 80 when they think that, the supply demand dynamic is still quite bullish because of, China coming back online, et cetera, et cetera. You know?
Yeah, I mean, I see one of the things that's telling me that another reason why it might go up, yeah, is when you get these big bars, you see these big bars down and then negated immediately. There's a big bar down. I call it big bar, no follow through.
Okay.
Another big
Yeah.
bar, no follow through. This, if it was going to go as a massive bar down, it should have
Gotcha.
carried on, but it got reversed. That means I'm going up, not down.
The Bears had their chance, huh?
They had the chance and twice, yeah.
Yeah.
And so it means, you know, think about it. If you, I always think of it, the analogy like this: you're stuck in a room and you're trying to get. There's two doors to get out. You try one door and they throw you back in.
Yeah.
Where are you going to try and get out now? You're going to go the next same door again that you just tried. They're going to throw you back in again.
It's really not.
It's
not really dissimilar to what's happening with the S&P. Some guys started hitting this thing, and there was no follow through, so they obviously got to change their tune, and that's what's been happening in 48 hours. You know.
Yeah. Another interesting market which we need to cover is the Bitcoin and the crypto market. It's also extremely interesting what's happening there at the moment.
All right, can you do that really briefly, and then I can give Michael the rest of the time a little bit?
I'll tell you what, go over to Michael and we'll come back to that afterwards.
Oh, no,
Michael,
go right ahead. Do crypto now. That's fine. Go for it.
Okay, we'll pick up Bitcoin. And we look at Bitcoin. We're looking crypto through Bitcoin futures here. Okay. Well, you see, we've had a massive move up this year so far. Yeah. You can see this. You can see the chart still, like a move off the bottoms, and this potentially could be. You know, I think we're moving. You see the charts? It's a bit slow to. We could be on our way back up again. But look on a monthly chart. We have to take out this level, but still, this is a massive move. We were talking about this is the move down. And again, if you look at the distance between the pivots here, they're getting smaller from here to here, and then from here to here, small. And we're very close to this major area that we moved up from. You see this major move up, and this was where we called the short to take this basically down. I was looking for this to move down. I would have liked it to go down to 10,000 and maybe all the way down here, but it doesn't look like it. Well, that may still happen if we don't take out this level, but at the moment, smaller time frames is bullish. The bulls are back in control again.
About 2-3 weeks ago, I said in my newsletter, you know, this GBTC and ETHE were definitely turning. So if you're ever going to take a shot, take it now, you know, and it's really popped quite a bit.
So we saw this on basically on this day. We were like, this is long now, and we're looking for this target, and then once it takes this level, like you see the pullback here, you see there's a tail there and here, and then we broke it. Once it breaks, I mean, we gapped up. Where'd you go? We're going higher now. We take out this big drop again. This is negation of, I call it. It's like Newton's laws in the markets. You get an equal and opposite force.
You do have some gaps there. Maybe they go down and get filled, though, huh?
Maybe. Yeah. Maybe. I mean, if
you want to add positions, that would be nice. If you're in there, you never want to see it drop a dime, you know.
Yeah. I mean, the market's been very, what's the word? If you look on the daily chart, not much volatility at all until now. Volatility is picking up again. Yeah,
quite a bit. Hey, Michael, let's go over to a market that I know you are very familiar with. You've been bullish on, you've been very right on, and that's the price of gold. And we had a very nice big move in gold. And of course, you've been on it the whole way. So I was just going to throw out something that I see a gap between 1825 and 1835. Is it possible with your work that it might go down there into that level? Or do you think that's just way too much of a dip?
I did hear some talk about that, but to tell you the truth, it was a difficult start. Now, this is again, daily chart, difficult start, you know, fits and starts and a lot of stuff going on. But once it started going, and the one thing that I did notice, like in here and here and here, and even in here, was that as they were selling it, the central banks were buyers.
Oh, totally.
The central banks remain our largest buyer right now. And that includes the US, the Exchequer, which is the UK, the European Central Bank, the Central Bank of Japan, the Central Bank of China. They're all buying, and the basic reason that I have found that they're loading up is because of the currencies all being digitalized. Yeah. And so with the latest thing at FTX and all the rest of that stuff that's happened in Bitcoin, and that, you know, people are like, no, you want me to accept a virtual currency? And it's not going to happen, particularly if they want to become the currency of trade.
Yeah. I always
gonna
thought
have to defend
I
it
always thought the
behind it.
dollar coins would make the most sense if somebody could secure them. At least they are
Well-
stable, what they call stable coins, you know?
Oh, exactly. I agree. And
Because
so,
the technology of switching money around very quickly with no costs involved certainly is an attractive one. But the unit of measure can't be anything that looks like Bitcoin.
right, right, exactly right. And so I think that's why, we're seeing that, I think there are just other factors that kind of go into, gold hiking itself up. Gold is always going to be in front of the curve if it feels that we're really heading into a period of deflation.
Yeah.
Not necessarily inflation, but
Well, I mean,
deflation.
M2 money supply has gone from plus 25% in 2021, 2022. It's now at zero. And there's only been like 4 times in history that the M2 money supply growth was at zero. So I think, they're getting ready to either print or they printed so much, we might even have negative M2 growth, but it's certainly in a place where if they wanted to print, they could print. So if liquidity becomes a problem in real estate because the house prices dump or some other liquidity crisis, they have dropped the money supply growth to a point where there's room to print.
Well, I also think it's like there are 2 basic ways that the Fed can get all of this excess capital off of their balance sheets. One, we know that they're trying to do it by raising rates. That's not working.
And letting the balance sheet run off. Yeah.
Well, the second one is to debase the currency.
Yeah.
Well, look what and you just gave me enough information. It says that's kind of, I think, what they're heading to do.
Well, the way they drop the money supply, they definitely do not want, they're not trying to ease money and credit. That's for darn sure.
Right. Right. So I think that if we go into that period of deflation, then you have to start seeing what gold did during other periods. And so, I mean, you and I, Jim, we've been following gold for such a long time together. And I was calling for this bottom. I called for it. It kept getting it, and it got down there. It held, tested it 3 times, held, and then took off.
You can see 1700 was the first buy signal, and then 1800 was the second buy signal, and now basically you're just enjoying the sun.
Was when it kind of broke here, but now it's kind of hanging out, waiting for somebody else to get above. And a lot of talk that I'm hearing lately is that it's not a matter of if, it's a matter of when we're back above 2000. But I think the current buying, the current strength, I am anticipating, as you can see by my fibs, I've got fibs, I'm talking 2,500.
Oh, yeah. I mean, that's the direction. And again, if they're going to ease money and credit and they're not going to try to get that inflation rate down to 2% for whatever reason, then, that's the way it'll work. But you got an 1825, and you remember I was just talking about 1825, 1835. Yes. So that would not be an unheard of pullback for whatever reason.
Not what we got going on there. Not only have that fib support, but right underneath it, and I imagine it kind of could move up. We have the 20 and the 50 moving average. So while I think that is possible, and we can't say definitively that a pullback wouldn't get us back into this area.
Yeah.
But I think that gold is truly holding its own very strongly. Now, coming back, and if you're just looking at it on an hourly chart, it's very tradable. And so, this is kind of like chop junk, but it's corrective. And then when I start to see them come back in, then the trend is picking up again. So I'd be looking for that stronger move, and I'd be looking for it to take out 1940.
Yeah.
And start heading up to 1950, 1953 is where our next resistance is. And it's really low level in terms of the bigger picture. That's low level. So
the mining shares also, obviously, that I talk about had a tremendously large run, but they're a little bit stally here. So, if they stall out and roll over, then it's not unheard of. The gold could pull back, but clearly you got a bull market going on there.
Yeah, they kind of did, and now they've recovered. See, look what they did. That's where they started, and now they're doing so. It's like, no,
that's what I'm saying. Is it just a stall and it's going to blow through 32? That's possible. Obviously, the green bar makes it look like that is going to happen.
It already has sailed through 32.
Yeah. Underneath your RSI is that a little bit lagging down there, which is a little bit of a divergence?
A little, but don't forget that That could, yeah, it is, because you would
Yeah.
expect it to be back up in here and to being
Yeah.
overbought. And that might have caused that, but to be honest with you, I'm not really sure what all of that selling was about.
Yeah.
Because again, the miners, I do correlate if the strength in gold should transfer over to the miners, and this being an ETF, it's doing it all collectively.
Yeah,
But I
right.
think that what happens in there, we have to kind of, I think what can stall it out is just what the cost of getting the gold mined is.
Yeah.
For the miners. So when we're talking in that level, I think that can stall out a rally in the miners. But other than that, I would think that not necessarily point for point, but I would expect the miners to continue. And if I pull this chart out and make it look a little bit, yeah, you're looking like it should definitely, this was that complete. So again, it's still working on what I would call its first wave up within the new uptrend, up move.
Yeah, yeah. In other words, there's more legs to it. I'm looking at Freeport-McMoRan also. That's a copper, and that one had a big run as well from 25 back up to 45. But that is a little bit stally here too. So I'm wondering if the whole metals complex, is it possible that it could give people a better opportunity?
Well, I think I think this one's got still plenty.
Oh yeah,
I mean,
no, on a longer term basis, it obviously it came down from it's been traded as high as 60 in earlier years, like 2011 and stuff. So
yeah,
if it blows out
this
50,
was,
who knows,
you
yeah.
really needed to get, yeah, this has not stopped since March of 2020.
Yeah, no, you had your pullback to $25. That was the time they pulled it back for you to get back on the boat.
You're right.
Yeah.
Right there.
Like I say, China wants to build all this stuff. They want their real estate market to come back. It takes copper. There's not unlimited copper mines out there. So, it does have a good story behind it.
Right.
But it's all a question of, where to get on the boat. Obviously, 25 was a great place. And then, even recently, a good pullback towards 35, 37 wasn't a bad place either.
Right.
Yeah.
I agree.
And what about silver? Do you have any opinions on silver?
I actually do. And I don't know why silver is being like the slowpoke of the century.
Yeah.
The bastard stepchild. I didn't want to say that, so I'm glad you did. Yeah, it is
because it is undervalued to gold, I think.
Absolutely.
Yeah.
And I've not been able to really suss out why the market feels that, but here is the turn. If we consider what it did yesterday and now look at that recovery. So whoever was in to sell silver, I don't know if somebody got shut out of a position. I don't know. We don't know what was behind that quick drop, but we're seeing that it ended today, this morning. So I just think it's having a lot of trouble even mirroring what gold is doing.
Mm-hmm.
But I do have a count which does suggest we go up. But if this is a third wave, that is a really pitiful beginning. So I may have to reevaluate what I got going on, because right now it is 3 and a 5. So it's an ABC up and not the start of a 1, 2, 3, 4, 5. So silver could be left out of this.
Now, there's one commodity. One commodity I want to ask you about is soybean, because I've got this sneaky suspicion that it could have a very large move to the downside, and it just is coming off 1550. It's at 1487, and rain brings grain, and Argentina has their rain, and so the grain is coming, and so all the grains, because the grains have had a huge run in the last few years, and you would think when prices go high, people will do more planting because they can make more money.
But I'm going to agree with you on this, even if I'm just, I don't have Elliott on this, but if I'm just looking at from that high, which was the June 22 highs.
Yeah.
Decline, recovery. We got another one of these coming over here. So you're looking at, the possibilities on the weekly gets down to 1270.
Yeah, I mean, it's something on the board that I just thought, the throwback rally to 1550 might be it, and then so that's a good point to defend.
Yeah,
And then basically, if we start breaking under 1450, you could maybe get some acceleration there.
Now I'm going to yesterday's highs,
So
and this would be fibs. And if we're just thinking that it's going to equal, if this equals that, that's what you're looking at.
Yeah.
On
Yeah,
a
because
fib
clearly
basis.
there's a lot of people on the long side of this stuff, and a lot of you always got people who'd want to hedge their inventory, so you could get natural sellers just out of the hedgers. You know what I mean?
Well, you know what I was thinking about? It's like, well, state of California's had a lot of flooding, but what about, the Midwest? We're getting ready for planting.
Yeah, yeah. And like
And
I
so
say,
what
the
happens
the
if-
news on Bloomberg about Argentina is that they're getting the weather they need to get a good crop, and then you got Brazil, stuff like that. So it'll
Right.
be
So, I mean,
interesting. It'll
yeah,
be
and that could
interesting.
take over.
This could either be the start of something or just a pullback. I guess we'll know soon enough.
But there's your potential. So yes.
With regards to say the NASDAQ QQQ, because we talk about S&P all the time. What about let's look at QQQ and IWM, because a lot of people are running into small caps now with both feet. So let's look at
Certainly are, and in fact, the Qs are going to go pretty much in lockstep with the NASDAQ, and of course, even in the Qs, you got Apple, you got Microsoft, you got Tesla. Those are the heavily weighted guys, even in the Qs. But this is a second day of humongous gains.
Yeah.
So exactly what it is. If I had to look here, I'd say, yep, it should be coming up. And this is the weekly chart. Let me open that up so we can see this move.
Yeah, that 275
I would say
to
we could
300
move up
area
before
right?
we're done. We're probably going to head back to 300.
Yeah. Yeah.
That's
maybe
that's the potential. But in its way is the 200 moving average right here, the 200 period moving average, flat as a pancake.
Yeah.
That's going to be pretty stiff resistance right now. And in fact, you can see it starts to head up towards that and likely will get stopped. Or if it does, it could do one of these, right? Push up through it and collapse.
Yeah.
And that could happen tomorrow on Tesla's earnings, Wednesday on Microsoft's earnings. Who knows? I mean, I'm getting, I don't want to call it chatter, but a lot of folks are coming out and basically talking about how, some of the people are like Morgan Stanley, they put out this whole big print or a notice. They're talking about that they're continuing to see that there will be an erosion in earnings.
Yeah, no,
And
that's
that
their
the
pitch.
last-
That's their pitch. Obviously, it's not working out with the price right now, but if it happens, obviously they're going to be correct on it. Yeah.
But what they are saying is that the gap between their model, the gap between their model and forward estimates is as wide as they've ever seen it. And the last time it was this wide, the S&P fell by 34% and then 49%.
If the earnings break, the prices will break. Let's look at IWM and also VOT. That's a small cap and mid cap. So
the Russell has really caught a leg and it's doing great. But at the same time, I think it's corrective. I think they're kind of reaching up. They're getting pretty dang close. So maybe we get up to like 190, 191.
Mm-hmm.
I think they're going to have a tough time trying to get it back above 200, but we'll see. Because
right now, if it stays above
180,
175, 180, it stays above 175, 180, that kind of area, that's very constructive. So until you break that number, being constructive on it is not crazy.
Well,
and
it's at 188 right now.
That's what I'm saying. But last week was at 180, and then
right. So it kind of held.
In other words, you had your correction there. They couldn't break it. Now they're going the other way, and so now if it stays above 180, 185, you're probably in good shape on the short.
Right. But again, what I think we're also seeing in the Russell, because they're the mid cap, is that you're seeing a lot of what people are trying to recession proof by moving money in out of the big caps into the mid caps
and small cap. Yeah.
Yes,
small
the
cap,
mid and the smalls.
How about two other quickies, SMH and IGV? Those are also technology oriented, right? So SMH is, so the semis are going up.
They're going up very nicely, as a matter of fact.
And what about
Again,
IGV?
weekly chart would suggest, let me just do this real quick. from this level, they've already hit, they're sitting right at resistance, which is at 238, 239.
Right.
Then you're going to have 243, then you got 250. And I
Right.
think 250 is definitive possibility. But if this is going to equal that, you're looking at 265.
Yeah. And IGV is software?
IGB.
IGV, India, Gary, Victor.
Okay, hold on one second. India, Gary, Victor. Same thing. And I got a question for you before
You see how
we
low it
finish
is though
up.
from where it was though, huh? Yeah.
Yeah, I think we can get up here to the 50, 292.
Yeah.
Maybe
That's
even
where
300.
that's where the like risk on is going, you know, into,
Yeah,
into
what do you
these things.
think about, I know we got about 2 minutes, but I want to
Yeah.
hear your opinion on AI,
AI meaning
artificial intelligence.
oh yeah, well that's why, you know, Microsoft's making a $10 billion investment into it, and you know, obviously that's you know, a great play. Well, India, if you like that kind of stuff, you got to like NVDA, because you know NVIDIA is like the
A lot of people
Cadillac
do.
for that stuff. Yeah, because
NVIDIA is up
they have
13
the
and a half.
they have the graphics that you need to make that stuff run. So in
Yeah.
my view, the play, if you like that kind of stuff, would be NVDA, but that's a wild ride too.
They all are. But I
Yeah.
think that is the next sector that's going to take hold.
Yeah, it seems to. All right, as
In
we come
my-
to the top, as we come to the top of the hour, since you're on the microphone right now, Michael, again, a little bit about your company, and when people call, how are you going to help them?
Again, my name is Michael Filighera. The company is, it's actually 2 websites that I have, and that is logicalsignals.com and tradershelpingtraders.com. I have a YouTube channel, and it's accessible if you go through tradinghelpingtraders.com. And within that, I do an update on the S&P and the NASDAQ each day, an Elliott Wave update. And then once a week, I do a big picture update under the Eye of the Storm podcast. And now I've also expanded, and I'm now having guests on my podcast where they can come in and they talk about their work, and they may talk about their products. And those are all available on YouTube.
Sounds great. Okay, and Simon, again, could you reintroduce yourself and then explain when people call you exactly how you're going to help them? Simon?
Okay, can you hear me?
I can hear you now.
Hi, I hit the button and I muted myself as opposed to unmuting myself. But anyway, okay, so TradeSmart is the name of the business, and the website's tradesmartforex.com with the number 4. And you can go to my website. On my website, you can, there's free videos, and you can also get a link to my YouTube channel, or just go and look me up on YouTube. Just look Simon Trade Smart or something like that, and you'll get my YouTube handle. There's lots of free videos there. Also, just to remind everyone here that I'm speaking on David's next program on Wednesday, and I'm going to be doing a live market analysis and going into behind the scenes how supply and demand work in the market. So you can actually come and join that on Wednesday. I'm speaking at 1 p.m. Eastern time. And yeah, I would say come and have a look at some of the free stuff first, and go and look through my YouTube channel. And then if you want, you can come and join our live trading. We have a live trading room every single day. We have a Discord server as well, and you can come and join the Discord server and connect with other traders as well. And if you haven't had success following other successful traders, I'm not talking about the ones that aren't, I'm talking about successful traders here, and it's not working for you, and you want to take a step back and start from first principles and be able to develop for yourself your own trading plan and strategy that fits your personality and lifestyle, then this is the way to do it. We go back, we learn, we build the foundation, and then we build that building. Once you've got solid foundations, you can build whatever building you want on it. But if you just build a building and you don't have any foundations, that's why many people, I believe, are not succeeding, because they're trying to build buildings without foundations underneath. So, and I think the foundation of every successful trader, especially if you're chart-based, is understanding how to read price action.
Great. And again, we do have that sessions coming up all week long, Tech Wizards. So everyone should make a note that look out for the invitations to that all week long, Tech Wizards, where we're going to go over software and we're going to go over technical indicators that each speaker likes. So there's a lot of good information you can pick up that way. So remember, Tech Wizards Week is this week. As far as the Option Professor is concerned, just go to Option Professor, singular, optionprofessor.com. And we have a PDF on hedging, downside risk, but upside surprises as well. A lot of people are being surprised. So there's a way of hedging against that. We also have got our best ideas by sector. And then we have a one-on-one online meeting for 1 hour with myself and yourself going over your questions and things like that. So that's optionprofessor.com. Hey guys, Simon and Michael, always great to talk to you guys. And we'll be talking again soon, I'm sure. I'm going to send it back over to David.
Hey, thanks, Jim.
All right, thanks, guys. Yeah, so as I mentioned, we have one of the big Synergy Trader events again this week. So, so this will be another Tech Wizards themed conference. So it's all software, indicators, algorithms, apps, tools, platforms, that sort of thing to help you make money in the markets and help you make 2023 your best year yet. And so if you just go to, so we'll be starting at 10 a.m. Eastern time tomorrow. And if you just go to TimingResearch.com, you can, there'll be links all over the site to join the room. Or if you're subscribed to our email updates, you'll get an email in the morning with from me and from the Zoom system on how to join the room tomorrow. And we'll be have about 30 sessions throughout the 3 days, Tuesday, Wednesday, and Thursday. And the Option Professor will be on at 6 p.m. Eastern time tomorrow on Tuesday. And Simon will be at 1 p.m. Eastern time on Wednesday. And Michael will be at 3 p.m. Eastern on Thursday. So be sure to join us for that. We have a lot of good info prepared for that. And so I just want to remind everyone, you can also subscribe to Timing Research on YouTube and your favorite podcast app. And I always post the recordings of this show and each individual presentation from the big events, you know, to those different forums. So if you can't be there live, you can always review the recordings. And let's see. Also, if you subscribe to anything on Substack, I have set up a Timing Research Substack account, so you can get the updates on archives and that sort of thing that way as well. And just want to thank my guests again for today. Michael Filighera of logicalsignals.com and tradershelpingtraders.com, and Simon Klein of tradesmartforex.com, and the Option Professor of optionprofessor.com. So thanks, everyone.
Thank you.